Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, June 23rd, 2021. What I'm going to do is start out with a brief update on the broad markets and then highlight on some or focus on some of the recently highlighted trade ideas. That would include Bitcoin, Ethereum, gold, and then of course I like to include analysis of the dollar and euro with gold. There's some things I want to point out there for you. And quick update on lumber, crude, and commodities in general. We'll look at DJP, that's all-inclusive commodities ETF. Anytime permitting, I'll look at some of the individual commodities. All right, let's start out. SPY, really not much different than yesterday's update. This is a daily chart. There's that secondary trend line breakdown and back test right there. Still the big divergences in place, which indicate a significant trend reversal is likely. As I always say, divergences can extend, and until and unless they're taken out by moving above the previous highs in these indicators. Again, I put the odds at well above 80% that we're going to have a sizable correction based on these divergences. So that's SPY. That's what it looks like on this daily chart. 60-minute. Well, I haven't really looked at that in a while. Let me update that. Same thing. We put in a divergent high back here. We had actually a trend line there on my futures chart. We broke down, had a little snapback rally. I talked about in the futures how we were above some previous reaction highs, but when you look at it here on SPY, because remember SPY, you're looking at trades from 9:30 a.m. Eastern time to 4 p.m. You're not seeing all the round-the-clock trades like you do in ES. So far this one, it's a breakdown and a snapback rally, and we could have still, a clean downtrend as long as we turn down soon. If we take out that high, well, what's going to happen? If we can do it and it's just a marginal new high, you'll still have the divergences in place. So nothing's changed on my technical outlook, but I'm leaning towards this. I think that's it for the kickback rally right there. Good chance. I can't make a hard call on, to say go aggressively short now, but I do believe that's probably it. That's what SPY looks like. QQQ, 60-minute chart right here. Let's see, let these lines populate. This was the trend line that I've been tracking right here. So it's basically a breakdown on this 60-minute chart and a back test. And this high right here, we just moved the markers right there. It extends the divergence. They're certainly still very much intact. And we could probably add a what I call a BOD, or benefit of the doubt trend line, if we wanted to. You can come in there, you capture more candlestick bodies and or shadows, the skinny part, or you want to be very safe, you can use that one right there. But either way, I'm still seeing downside from here. I think a correction is imminent in the equity markets. And again, big divergences that say this helps formulate, when you get the next pullback, once we get some sell signals and break those trend lines, take another leg down, take out the recent reaction lows, that's what you want to look for as well. This helps to formulate, okay, are you looking for a quick 7, 8, 10% pullback, or are you going to hold out for something more? And this says quite likely we're going to see something more. Talking about it for a while, but again, I don't control these divergences. They build. And remember, like we had the divergences last time right here at this high on QQQ. Right there. But when we look at SPY, we didn't. So this time around, we have divergences on both indexes. So that previous high, you didn't have it, and you certainly do in the S&P 500 now. Quick look at the futures. ES, again, that's what I was talking about a minute ago on SPY 60-minute. You had these little zigs and zags, and this one took out that reaction, but you don't really see that on SPY. And again, it's not, when you take out a previous reaction high, certainly cause a near-term downtrend into question, but it's no guarantee you're going to blast on to new highs. And we're starting to diverge here right now on the PPO, and pretty much, flatline divergence there on the RSI as well. So this would be the line if you're an ES trader. No, let me take that away. I don't like that trend line. There's not enough reaction, but there is divergence there. That is, again, ES, the S&P 500 E-mini futures. And then NQ, we've got it here somewhere. There it is. Still waiting for this trend line right here. There's our 60-minute trend line. There's our divergence line. Negative divergence, building. And so a break of that. I think I might have had a level here before. Sometimes these levels just kind of disappear. Sometimes I have to update these charts when the futures roll. Then I have to go to a new contract and start with new trend lines. See, I don't see this was a big level back here, that line I just added, but we sliced through it here. So I'm gonna. That's probably why I took that away. Maybe I did that on purpose. This is the big one right here. This trend line right here, uptrend line off the lows from May 19th right there. Break of that should take us down at minimum to 13,738 or 737, and quite likely the second target zone, and then maybe, and I believe good chance work our way down here. Minor zigs and zags aside, down to about 12,934. Okay, but it's been the same story. The markets continue to just kind of grind higher ever so slightly. You look back for months, it's been mostly a sideways trading range, and we're pretty much at the top of that range. So let's talk about where the easy money's been. It's trying to make money in the broad market lately is like squeezing blood from a stone or water from a rock, whatever your preferred saying is. I've heard them both ways. Bitcoin, GBTC, Bitcoin Trust. More upside today. This was, here we go. Yesterday, I changed the color coding just so you can, if you're catching up. This was first target zone. That was our sell signal back here the day after it peaked. First target hit, bounced around. We consolidated above that with multiple tags, that first target zone. That was our next sell signal there, break of that. Hit the second target, and same thing, we consolidated on it. And then just hit the third target yesterday, and so far that's good for trade. T1 was hit yesterday, and 23% gain so far, and still think there's a decent chance we can make it up here to T2. So my preferred strategy right now is just to trail up stops. At this point, we already came through T1. Or, again, it depends where you bought it. I can't tell you where to put a stop because you may have bought it at the lows, you may have bought it, in the midpoint here, anywhere. Stop should be commensurate or in line with your preferred price target or targets. If you're going to take part off there, half profits, let it run, as well as your overall position size, and your stop should be set using ideally I like a 3-to-1 or better risk-reward ratio. Sometimes that'll change depending on the trade, but that means you'll risk $1 of loss for every 3 units or $3 of profit that you're going for. So that's it. Does Bitcoin take another leg down? I think so, and I think it can work its way down to $17 here. So I can't tell you with the highest degree of confidence. I could tell you that was a very objective long yesterday. That I had with a high degree of confidence. Can't guarantee it'll play out, but you take a shot at support with a stop below. But what I think will happen, come up here, that's pretty big resistance if we get there. If we pop that 39.25, again, these were the targets on the way down. They just become the targets on the way up. But I'm just holding off. This is my bounce target now. And I think at some point, maybe even shy of that, we may take another leg down here soon to about the $17 level. I'll let you know at the time if my conviction on that call goes up strong enough to take a position, short it. I'll always kind of tell you what I think is going to happen, and then how sure I am or not sure I am. And when not sure, I always say this: trading can be tough enough. Take the trades that have the highest probability of success, the ones that fit your trading style, your kind of chart patterns, your security. Pass on those that don't. If you try to take everything out there, you're over trading, and Mr. Market will slowly but surely take your money from you. So anyways, still looking good on Bitcoin for now, GBTC, and then ETCG, Ethereum, same thing. At the same very time we hit that 2244 target, we reversed. It's up again today, another 3%. This one, as you can see, I have a lesser target relative to where we're at, or at least today's high. I believe I told you yesterday about the bottom of that level, about 29.44, and I always like to sell a little shy. So on these guys, I have limit orders set just below that level slightly, and that on Bitcoin as well. And then I have some Bitcoin futures. I don't think there's futures in Ethereum. If there are, let me know. But this is the one I've traded for a while, and they changed the contract a while back. It used to be more highly leveraged. It's a pretty small contract now. And that is BRR, Bitcoin Futures. Let me see if I can add. I'm just looking at this now. I had to run out today for something, so I've been catching up on the charts. Yeah, there's a nice clean downtrend line right there. I didn't add it yesterday because we didn't have enough reactions, but at this point, you can see the high right there. Reaction high on that candle, I believe you can. several reactions, and right there as well. So we did put in, as I mentioned yesterday, positive divergence at that low, and that was this thrust up here. Gave us a nice pop in Bitcoin. That was the same time the future or Bitcoin Trust hit support. That's about a 22% rally so far in the futures since yesterday's low. And that's it. So there's resistance, and now it's resistant. Before I didn't really have enough reactions. This helps to validate that trend line. So where I'm going is, if you're looking for an additional buy point, an entry, an add-on, I think a break of this trend line would do it. My next resistance depends where you break it. If we broke it today, that's not a big move up, but it's worth trading. If you're trading futures, again, they're leveraged. Let me just show you. If we popped it today, it's about 3.6% if we just went up right now and took it out to get there. So that's still the next stop. Oh, by the way, I replicated this chart. All my lines were populated. I don't know if this one rolled or not, but when I pulled it up today, all the lines were gone. Sometimes that happens with this platform. And so some of these levels might be different from what I covered yesterday, but I did take some time to look at that. That's a big level right there, and that is if and when Bitcoin futures gets there, and I'm still in it, BRR, I'll be selling just below that 40.51 level right there. I'm sorry, 45.13 level right there. That's big resistance. And of course, it's always possible that that's it, that this is just a counter trend rally. We take another leg down, and if we did, look, we're going to still have big divergence. So if we break down and go to that next target on GBTC or anywhere in between, even, I'll be watching this. If divergence set up, even larger divergence, and I can make a case to step back in if I get stopped out of this trade or decide to throw in the towel and get back in later. I'll let you know. But at this point, if you took it anywhere near yesterday's lows, there's no reason not to raise stops to protect your profits at this point in time. All right, that's cryptos. And then on a somewhat related note, is gold. Obviously not a cryptocurrency, but often a play against a weakening dollar, also an inflation trade at times. Gold kind of does its own thing. You can't always fit it in a box. Sometimes it'll rally when the dollar's rallying as well, and sometimes, but most often you want to see a falling dollar when you're long gold. So what I'm going to do is you have a little another reaction high right here. So we need to pop that. This is a 60-minute chart of GC gold futures. Back here I was warning, suggesting not to buy gold. It looked like a correction was likely. Hold off. And we have these divergences, and we did. We got the divergences played out. That was sell signal number one, breakdown back test. Then the primary uptrend line on the 60-minute chart gave way right there. It was impulsive. That was sell signal number two. And then boom, down to here. That's a support zone. We hit it the other day, and for the first time in a while, we put in divergent low. It wasn't a very big divergent low, and the divergence was steep. And I'm going to get to something in the dollar and the euro for a second. I have to tell you that although I am bullish, I'm long gold right now. My convictions aren't super high, so I'm kind of a light position in that. I can certainly see another thrust down, and to where I'd get really excited if gold could come down here at about 1726. And doing so would look like this. Let me erase all those lines and just show you what I would envision here. If it happens anytime soon, see these divergence lines, extend those out. I get another thrust down in gold to that support level, and there's a couple minor supports below, about 1753 and then 1725, and we could have an even bigger divergent low, setting the stage for an even bigger rally. So that's my outlook in gold. Now, if this little divergent low continues to play out, and it could, we need to pop that. Of course, that recent, just that previous reaction high right there, and a bigger level to me is 1800, or I have it at 1802. That's pretty big resistance. If we can pop that, I think it's smooth sailing up to about 1848 right there, and possibly more. Maybe like I talked about, maybe the beginning of a new leg up in gold, which we really started back here, but to new highs. Now let's look at the dollar. DX US dollar futures. This is also a 60-minute chart, kind of painting, helping us figure out the near-term outlook. There was that bullish falling wedge, positive divergence, breakout back test, uptrend, and then most recently we put in this divergent high right here, which was a catalyst for this correction so far. I still think at minimum we pull back to 91,373, so that should give us a little more downside in the dollar. Should be bullish for gold. But if that scenario I just laid out, where gold might take another leg down, does pan out, then look what we might have here. We could get another thrust up in the dollar. I'm going to draw out this scenario there if it happens soon, and that could put in a divergent high right here, an even bigger divergent high, and then setting the stage for that bigger rallying gold. So that is, I wish if I could assign odds and probabilities, I would say close to 50%. And I don't, 50-50 odds aren't great. You'd probably be stopped out, or I think you should be in gold if it took that other leg down and the dollar took a big leg up. But again, it depends. This is a 60-minute chart. If you're a long-term investor, go off the daily charts. And, the case has been made there to recycle back into gold after sidestepping the multi-month correction off the highs back here. Was when it was time to get out, close positions on gold. And then we just most recently hit the top of my buy zone right here. And so the case can be made. And if you look at the daily chart, here, let me see if I can get a simple version of this. If we look at it this way, this was my buy zone right here, which we just hit the top of. That's the bottom of the buy zone. There's a big old gap to be backfilled. And so there's a near-term swing target if you're a trader in GLD, or even if you're using futures. Remember, sometimes it's a case of the tail wagging the dog. Futures have been around for a while. ETFs are relatively new, at least, if you've been around as long as I have, I've seen remember the predecessors before ETFs. You had these things, closed-end funds and unit investment trusts and all things like that, but I'm dating myself now. So anywho, the gold, gold came back. Let's see, when gold came out was right here in 2004, looks like. And so point is, a lot of money going in and out of gold, and when money flows in and out of these ETFs, just like the S&P 500, SPY, and all that, it affects the components. So just wanted to point that out. And that's what gold looks like on the daily chart. Now let's get over to, before we leave that, let me go back to, I showed you DX, Euro USD. All right, so this is the Forex pair with the euro and the dollar. And so when this is moving up, it means the euro is climbing against the dollar. And when it's falling, the euro is falling against the dollar's rallying. And this is my weekly chart. Yeah, it's done a really good job of kind of steering the ship and helping us time especially our longer term positions in gold for months now. I've been, was bullish gold back here, bullish the euro. We had a breakout, highlight all these, even bearish back here. We had a bearish wedge, that was that drop. So when you see this, remember gold's going to move in line with the euro. So you can almost trade this chart blindfold, not looking at gold, and do well. So there was a breakout, gold rallied and the euro rallied and so forth, so on. So recently we put in this divergent low, but the most significant development in recent months was this breakout right here above that primary downtrend line that goes back for many years. And now where do we go? Most recently back here, I warned of a correction because we had that divergence right there, the negative divergence. And then we get the sell signal there. And pullback targets were 19,360 right there. And then the trend line. We had a perfect back test of the trend line. So based on this is still, I'm viewing this as longer term bullish for the euro, bearish for the dollar. That is a breakdown after a more significant long-term breakout. So, you break out, you had an extended run, you come back, you back test, and we may continue on up from here. We could make another back test, but I'm leaning towards this. Again, bigger picture stuff. I just spent a lot of time on the 60-minute chart. That kind of hones down the near-term outlook. But this is a longer term outlook. That's my preferred scenario. Big number right here is about 122,617. That's these two previous reaction highs here. You also had a bunch of reactions on that level there. If and when we break that, that's going to be longer term bullish for the euro, bearish for the dollar, and bullish for gold. Okay, and now should we continue to fall down, we have another back test of the trend line. That would be support, and then a pretty good support level here, about 115 on the euro US dollar. So that's kind of longer term stuff. Let's do a few more and we will wrap the video up. I want to talk about lumber. Okay, for many months now we're tracking this parabolic advance right here. There's a couple trend lines there, but there's a parabolic one, meaning curving. I can't curve it with the drawing tools I'm doing here in the video. And warning and highlighting time and time again. That's what lumber does. When it starts going parabolic, and you break that parabolic trend line, you get very, very strong corrections. That one right there, it really didn't end to this divergent low. That was a regular trend line break, but this is the nature of the beast. There was a parabolic run right there, boom. And so far it's been over a 50% or about 50, a little over percent drop. And I told you way back when I was targeting down here about 825 right there, and we're getting very close. So bottom line is I think the correction is close to being over in lumber. And that may be a long. In fact, I gave you a chart the other day. We'll get to that in a second. Short-term 60-minute chart. But I wanted to kind of segue into crude oil. I want to talk about these, the big moves that come after an extended run. Okay, this is LB, 60-minute chart of lumber futures, and this is the one I highlighted the other day. You have these little, this was our, sell signal at the top, came on this trend line break, and then this more significant primary trend line on the 60-minute chart here. Then you have these little downtrend lines that have been forming in the downtrend, and this is the most recent. And we have some divergence at the recent lows, so therefore we're right on it now. Not a breakout yet. You want to see an impulsive move, solid green candle, especially solid close, and there might be some stops along the way, but I think lumber may snap back all the way up there about that 1190, 1195 level. Might have more downside because we're not to my target on the daily chart yet. We're getting close, but not there yet. Doesn't mean we have to hit it. But if we rallied from here, that'd be about a 34% run in lumber. Now I wanted to show you crude oil as well, and then we'll wrap the video up. Okay, let's go here. Okay, this is a long-term chart, weekly chart of crude. We're going all the way back into 2006 down here. You can see the year breaks, 07, 08, 09. And although there's quite a bit on the chart here, some of the things that stand out to me the most, and I mean, pretty simple stuff, but not super simple because it's not always a one and done. You look at oversold and overbought readings, and that's where you want to be going long crude oil. Look at these circles. Oversold. Even though this didn't mark the end of a downtrend, there was a big rally. I mean, that's probably what, from $40 to $60. That's 50% rally right there. And that one was probably 20, 30. And then the bottom came on these 3 consecutive tags. And not only, with overbought and oversold, usually just overbought when it's up above this top line here, that's a 70 level, and oversold's 30. Even that usually does enough, but all the better when you get divergence. Positive divergence on bottoms, a series of higher highs, especially with both indicators, and negative divergence at the top. And keep in mind, this is a weekly chart. Again, sometimes it's one and done. There was a one and done oversold reading. You want to buy crude. If you stepped in when everyone thought the world was going to stop spinning last year when COVID hit, that's when you want to buy crude. And now, when do you want to sell crude? You want to sell crude. You want to look for these divergent highs. They mark major tops. There's one there, divergence. There's an overbought reading. And but again, all the better when you have divergence. There was divergence there, and there was a big drop. Crude drop from 55. I'm using log scaling, so it's a big drop. 55 down to about 42 right there. And now this. So rarely will you see these divergences get burned through. They can get bigger, but you need to heed the warning when you see the divergences forming. And then more importantly, I also like to see when you come up to resistance as well. You're overbought and at resistance. And this is a big level. This line right here is, where is that line? Let me tell you exactly. For crude traders, that's about, what is that, 70, we'll call it 77 to 78, maybe, yeah, call it somewhere around there, 77 to 78 a barrel, that horizontal line. And here's a potential trend line. This is not the best trend line I've ever seen. I wish there were more reactions on it, but there aren't. Either way, it's painting the bigger picture. And what does this tell me? Again, just like lumber, You get a hold of a trade that you have a lot of evidence on the weekly chart, like we did, and I've been highlighting for a while in lumber. If you can get a hold of a trade like that and tuck it away, you might get stopped out, and that's how I trade. I like to catch tops and bottoms, and yeah, you tend to get some fingers chopped off when you try to catch falling knives or short something going too high. But the key is not to short and tuck it away or go long and tuck it away. And so you may get stopped out a few times. So you're not going to, although this is not the best defined trend line, what you want to look for to get in when you see those developments forming on the longer term charts, hone down your entries using the daily and 60-minute charts. And this is CL Crude Futures. Here's that uptrend line right here. Let me change my tool color. We had a 60-minute trend line, pointed out, broke recently, and what did we do? Instead of continuing lower to that 66.61 minimum and first target, we just had a snapback rally, which is only back tested crude from below. The divergences are still intact, and we're still below the trend line, and now I've set up a minor trend line here, so that should do the trick. And again, 66.60, we'll call it, is my first and minimum target, but if this starts to play out, I'll watch the daily and the weekly charts to determine whether to let it morph into a trend trade instead of a swing trade. A swing trade, it's shorter term, typically days to weeks, and a trend trade usually lasts months, maybe even years, depending on the security. And so that's another trade idea for you there. Last but not least, DJP is an all-inclusive commodities ETF that I've been highlighting recently. And I'm longer term bullish. I just started out here on the weekly chart. Lately I've been covering the daily, but I've highlighted this before. There's your long-term primary downtrend line. Commodities have been in a bear market since all the way back around 2010, 2011. There's your bear market. But then something changed here, and this is why I differ from Powell, and he or I will be proven right or wrong over time. But I believe we're in the beginning of a new bull market in commodities, and that's inflationary. Make no mistakes about it. That was a breakout of the primary downtrend line. We did so. There was positive divergence in place. On some of my boards I have it drawn. Trying to get a straight line tool. There's your divergence right there. Bullish divergence. Breakout, and now you have this uptrend line nice and clean here on the weekly chart. So we pulled back to support. That's the same as that price channel here. I'll put it in there. I was showing you this on the daily chart, which we'll get to in a second, and we hit it, and we hit this 25.88. That's good support. So the case was made and still could be made to step in and buy commodities. There's support there, but we're getting a little frothy here. Well, a little bit. That's one of the most overbought readings we've seen, or the most overbought we've been on this commodity. So nothing goes up forever. I'm going to just say it very clear. I think the risk reward, I'm still longer term bullish on commodities, but near term the risk reward is just not very favorable to me. I'm not sure if there's more downside to come, and I almost coin toss odds. So what you want to watch for, and again, I'm not going to go through each and every individual commodity because they all have their own unique technicals. But I already shared what I thought would happen to crude. Well, I already showed you what's happened to lumber. Here's that price channel. As I mentioned before, simple stuff. You go long at the bottom of a channel, or close out shorts that you made at the top of the channel, and you sell your longs or short. At the very least, you don't add to longs when you're at the top of a price channel. You want to be adding on the bottom. But what made this one different, as I mentioned, we have had negative divergence here at this most recent high, and so no price channel lasts forever. Sooner or later, channel will break down, and that's my concern. And then we zoom in real tight. I mentioned this before the other day when took that as a long. I said a natural target would be that gap right there, backfill the gap. We did that perfectly today. See, there's the gap from just about a week or so ago. That's been backfilled. That's resistance. If you took DJP here, I know it hasn't been a monster trade. You can leverage up. This is diversified. Buying DJP, if you're a commodities trader, I don't need to tell you this. You buy natural gas, you better strap in and hold on. And when I trade natural gas, I don't take a huge position. If you take something like I take a much smaller position to account for the above average gain and loss potential on those trades. But if something like DJP, It's like trading the S&P 500 index fund where you have a lot of diversity. Corn may be going up while live cattle is falling, and then natural gas may be doing one thing yet gold's doing another, and that's what you have here. So my point to all that is, you can take 3, 4, 5 times the position size you'd take in a natural gas trade, and so far the return has been about 4.17%. So if you up that position size, it makes it worth your while to get 4%. Whereas, I make a call on natural gas. If it pans out in a week, a lot of times it'll go up 10, even 20% in a week. You're not going to see that in TJP. So it cuts both ways. Less risk on the downside, less return potential on the upside. I think still a great long-term vehicle if you want to round out your 401k or IRA. Just not right now. You could add to it, like I said. It may continue to bounce off this trend line for a while, but again, the risk reward to me isn't that great. And if nothing else, if you took it, just have a stop somewhat below the trend line, because if it breaks that, we're probably coming back into here to 23.33. All right, that's it. Those are some of the things I'm watching recently, and we'll wrap the video up here. And if I see anything else later today, I'll get it out to you. If not, we'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.